Hello, welcome back to another video. In this video we will talk about general rules of accounting. That how we move from general entries to general ledgers, and how we post the balance from the general entries to the general ledger, and then how we further move towards the trial balance. In today's video we will basically start right from the 8 to 10 entries, and we will continue with these 8 to 10 entries, and we will show you that how we can carry out these transactions. So let us start right from the basic. We will only follow the opening entries within this adjustment. So here we will write our first transaction. Owner brought cash within business of amounting 400,000. We have to mention out our currency here. Currency here is rupees. So first of all, we carry out this transaction separately. Number one transaction is that owner brought cash into the business. There's two accounts involved: the cash account, which is asset account, and the second one is capital account, which is also known as the equity or the capital. The both are same. We can consider this as equity or the capital account. So what happens there is the cash, whenever increase, the asset will also increase, and when asset increase, it will be debited. On the other hand, if we talk about the second step, the capital, which is known as the equity account, whenever increases, it will be credited. So here we show our first transaction here is that cash account debited with amount 400,000, and on the other hand there is a capital account gets credited with amount 400,000. So here the cash account gets debit and the capital account gets credit. So this was the basically our first transaction. If we move towards the second transaction here, say if we move towards the second transaction, purchase goods amounting 20,000 rupees on cash and 20,000 on credit from Ali. There are basically three accounts involved in the second transaction. There is a cash, there is a creditor Ali, and there is a goods. If we talk about cash, cash is an asset. An asset is increasing, asset is basically decreasing, so we will credit the cash account. If we move towards our second account, creditor Ali, it is known as liability account. So whenever there is increase in liability, it will also be credited. And if we talk about our last portion of this transaction is goods. Goods is considered as inventory, and whenever there is increase in inventory, it will be debited, because inventory is an asset. So how we summarize this transaction is that goods account, which is debit, we always write debit at the top, and goods gets debited with amount 40,000 rupees, because 20,000 are purchased on cash. Here we mention on cash, and 20,000 on credit. What is a creditor? Basically, creditor is the one whom we have to pay in future. He is our liability, so we have to pay creditor Ali in future. Gets credit here is account with amount 20,000, because what other amount goes 20,000, because our cash reduced with an amount 20,000, in 20,000 we have to pay in future. This was basically the second transaction here. Here's our third transaction. Rent. So here 3,000 rupees is paid for the rent. So what is basically rent here? Rent is an expense. Whenever increase, it will be, we have paid amount through, cash, and cash is asset, and asset is decreasing here. Decrease in asset, it will be credited. So section number 3, expense, we will mention to account. Amount of rent expense is 3,000 rupees, and here we will write 3,000 as well. So here is the transaction number 3. Well, the transaction number 4 here. Rupees. Stationery costing 300 rupees for office use. So one of my students asked previously that if we talk about stationery expense, either it's a stationery expense it can be office supplies. Either, what is the difference between the stationery expense and the office supplies? So basically there is no difference between stationery expense or the office supplies. Both of them are expenses. So here we will write office supplies think it talk about is cash is going out of the business. Cash is an asset is decreasing, so it will be. So number fourth transaction we will see here. Expense to cash account. Office supplies with an amount 300 rupees. Cash is 300 rupees. Transaction number 4, and we have moved to transaction number 5 now. In the transaction number 5 we carry out sales. Thousand sold the goods of 30,000 rupees on cash. So here we are receiving all the cash, selling the goods. So here we have two accounts: sales revenue, the sales account. New account gets increased, it will be. Familiar with the cash account, the second account involved here. Cash account is increasing, so whenever there is increase in cash account, it is asset account, so it will be debited. So number 5th transaction here will be transaction number 5. The transaction number 6 here. In the transaction number 6 we paid amounting wage. There is another account of cash, and wage is an expense. So increase in expense it will be. On the other hand, the cash account gets asset is decreased. Transaction number 6 as wage expense with the amount 10,000 rupees goes out with amount 10,000 rupees. So we'll write here the transaction number 6. In the transaction number 7 here we will talk about drawings. Amount of 4,000 rupees personal use. Here's a drawing. Basically, what owner take out from the business for their personal use. So drawing is an expense, and which is not a business expense, it's a personal expense, and whenever there is increase in expense it will be thing is cash asset. It is decreasing, so it will be credited, and we will write as a entry as a drawing expense account. These things are basically to explain you how why it gets debited or why it gets credited. So basically what you have to do is you just have to write these things as an entry: drawing expense account, basically the transaction. Here we mentioned 7 number transaction with amount 4,000, and here amounts 4,000 rupees. Now in the last transaction of the day, transaction number 8, deposited rupees. Two different accounts, cash account and bank account. Both are basically the related to cash or the amount, but some of the cash in hand is kept by the business and some in the bank, so we treat them as a different account. So here the bank account, which is an asset account, debited. On the other hand, the cash account is an asset account. It is decreasing, so it will be, so we will write this as with amount 20,000 to cash account, amount 20,000. So we withdraw money from the cash account and we submit that into the bank. Here were all the transactions. Hope you have liked my video. If you like my video, kindly subscribe to my channel and press the bell icon.